Hi, how are you? For those of you who have been following me, knowing that Pop and also probably waiting for the moment for me to talk about a few of the stock recommendations, what to buy for the upcoming weeks. So I'm gonna make it up very quickly because I know many of you are very busy, but I hope you enjoy the sections and kind of walk through some rationale as well what to buy, so you won't just follow blindly. So the first one I recommended is symbol BIGC, which is a rifle Sophie. It has a very strong growth potentials, and you went into IPO in the late August. So I don't know if Sophie was $1,000, which is pretty expensive. If you have $1,000, you can only buy one share, and you go up about $100 or so easily for Sophie. Then this stock will be able allow you to buy more, and you probably want to invest it there. So I have actually been very conservative about these prices. So if you can see the screen, the suggested purchase price was $72 to $75. The range have been really kind of big, $73 to $100. The 2-year target will be $200 for this stock. Again, if you think Sophie can grow, which you look at history of Sophie, really growing 10 times, then this stock, I mean, ultimately, even I'm telling you, just 2 times $200 is a very conservative, measure, really, right? And then you can take a look at the pricing ranges of this stock quickly. So we started in August again. It went into IPO, and it was actually started $68 when it went to IPO, and I think the P-IPO price was like $25-$30. Then 3 weeks later, if you can see the graph, it actually gone up to $105 around here, okay? And then in August 27, it actually gone up to $141. And this in August, remember the time that where the high tech stock is all rally, so I mean this stock just follow. And it come back down in September 3rd again, which is a buying opportunity, to 90 some dollars, $95 or so, and you keep going down. And now in October 15, if you will follow here, it's gone back up around $105 again. Then you come back down to $80. So I'm recommending about $75 or so if you come down a little bit more because you did hit down to, if you look at the previous week, and early of the week here, it did hit about below $80 of the range I talked about. So if you're going to hit around that range, because I know a lot of people only miss that range, miss that time when I actually have an earlier video I recommended to buy. So if you bought it around that range, then you should pick it up and you will be pretty easily to go to $90 and you can sell it at $90 if you want to hold it longer. If the market next year is bullish, I mean this stock probably will go back up to $100 more, and 100 could be 125 and so on. So it will be actually give a really good return. That's why this is the number one stock I recommended on my list. So I actually made money off of the BIGC before as well, and I've been tracking this since it went IPO. The second stock is XPEV. For those who also have listened to my video earlier, he knew that I have told my friends to buy this stock when it went on IPO in late August as well. So the price was started at $23 on the first day IPO from between the range of $23 and to $25, and it closed at $21. And then you dropped it as low as $13.31. But then you came back up. You've been pretty consistent in the range in terms of the price. You can see the graph is pretty consistent with the range around $17 to $20 until recently with the big spike here of this week. So you will have a really good opportunity if you have bought this stock, which like the way I told you, and the week before, which I have been propaganda this stock for months, and then you will actually have a very decent return. If you bought it at $20, the stock had gone down go up as high as $36, which means giving you about 70% return early, if I calculate correctly, right? You bought about 20, and then you got $16, right? Because it's 16 here, 35.58, right? And you use relatively short time, because again, you went and live in August 27, but you could have bought it in September, you could have bought it in October. It doesn't matter because the price have been consistent in that range that you have got it around $20 because I did some buy and sell. And why I think this stock, if I'm targeting, if we go back to the graph again, I'm talking $75, which is very, very, very conservative again. And why I say that? Because if you would have used this China electric vehicle compared to another one which called NKLA, which I have a graph here, prepare for it, you would have seen this stock. It was started at $10 IPO, and you actually gone up as high as $90. $90 at one point. See, you've tipped to a $94. And you tip back, I mean, if you look at it since June, you tip back in July whole month and gone back down to $30 for some reasons, good reasons. And you went back up again at $40, which are good news. And then you come back down again. I think the good news was to do a cooperation with GM to partnership to do some battery vehicles or whatsoever. But then there's some happened with the CEO flawed and then drive the price down and have the questions about whether we'll be cooperating it. The deal is still on, and then now it landed about $20. So this stock, probably you can buy it if you wanted to. You could be easily hit 25. That's $5 or 20 is 20% return for no time. Okay. The other stock which is really good is NIO, which actually have shot up as well over a week, and it was gone to $40 now from 20-ish. So people ask me what to buy with that one. I say I'll wait till come back down to $25 to $30 range, then I'll buy it, let it sit there. But again, I am really, really propaganda this XPEV. I think this is very huge and big opportunity next year for those who bought it this year, and next year by March, if we will hit to $60 and want to thank for me, you can share part of your profit to me. I don't mind. So again, this one in China was doing very well. You look at the revenue very nicely. You look at the profit pretty nicely. I think the vision is to develop and grow the U.S. market. That's why, and their CEO is very low. I think down to very low profile. So you don't hear them very much, and they're not on the news very much. Actually, this type of stock would be nice. You don't want a stock like Tesla always on the news. You actually want to stock that don't on the news and still hitting ground and keep going really good return. At least for me, that's how I look at it. The third one I'm recommending, which is going to be grow if Biden won, which we think Biden is winning now and kind of declared his victory, and Trump may be lawsuiting. We'll see how it goes. This stock have gone up quite a bit already, but you have really good potential. Again, I put $20 target is a pretty conservative numbers. And what it is waiting on probably is what Biden vision about green energy. Remember talking about stations on the highway or whatsoever that can have a recharging station for your electric vehicle to be recharged. This is the company. So this company, again, will probably do pretty well in the future. The key thing about this stock, which regardless of Biden or not, really have some growth potential. If you look at the revenue, which you can see the screen, it is actually consistently growing with the top line sales revenue, except 2016 was a little bit higher, so you tip back on the next couple of years. And then the earning per share, actually it was doing like it was a reduction of cost. You're still losing money, but it's getting better and better. So with the increase of revenue, signing contract with government, and with the good management of costs, this stock will eventually turn to, making money, profit, and with a good growth, top line sales growth. So I am pretty optimistic and recommended this stock to buy around, I typically more conservative. So I won't say go and buy the market price now, which is $9.90, but wait about $8 to $8.50, which is probably 10% tipping down before you, well, actually $9.55, yeah, about 10% tipping down. Then you can buy it and let it sit there for, it all depends, right? Market can go up and down, but maybe to next year, beginning of next year, we will see this stock already hit $20. Okay. The fourth stock I recommended it is a restaurant stock, TACO. I'm analyzing this one from a technical perspective, and I have seen and tracking this stock. this stock is actually very interesting. There's a graph to share as well. If you look at the graph, obviously during they were doing pretty well on pre-pandemic or seven-ish. Then during the pandemic, they actually went really bad. All the restaurant, retail business have been very hammered, and so does the Dow had done 1,000 point, 1,000 point, 1,000 point a day. People were in panic mode. It was actually dropped to 255. $3. So if you had bought this stock and now it's at $8, you only made $100+% return this year. Well, actually 7 months, which is very nice, right? And then you actually have been recovering. In July, where it hit the 753, then you get a little tip back about $6, and then it went back up again to really nice, because in August, if you remember, August is the month Wally Dow is up, Nasdaq is up, way up to hit the 52-week high. So they were hitting back as nice as and then they keep following. Even October was still up to $9 something. Then they come back down. So I think this stock, I won't recommend to buy right away at $7.93. I will wait until drop a little bit, $7, $7 below, then go and buy it, let it sit there. If it drop down to $5.50 or $6, don't get panicked. You will be rebounding back, and easily, I think it will be 2 years you hit $12. I mean, you don't have to wait 2 years to hit there. That's really conservative. With a technical analysis, it probably will go back up. I mean, by the end of the year or in January. But your all restaurant industry is all get hammered, but the stock actually was okay with the revenues. And then if things rebound with pandemic, which we don't know if we're facing a shutdown or not. So there's an opportunity that this stock may drop down to the price level. I talk about 550 here, and then you can actually buy it and wait it to hit about $9 or $10 to sell it. Okay. Then the next one is SUM Sum. This one doesn't matter whether originally was recommended at the time. It doesn't matter whether it's Biden or Trump is going to win now. It's kind of Biden. This has a control of U.S. government, have been doing business for time. So if you look at the graph again, the pandemic, before pandemic, this is the financials. We can talk about the financials first. So if you look at the top line sales, actually be growing and pretty consistent around 2. And then the income, actually the good news is they're making money. This one does have a positive EBITDA. So which is really nice. Some of them, after everything got deducted out, they actually still operate at a loss with nice top line sales. So this one is very consistent. I've been tracking it very well. And then with the graph again, this stock will tell you kind of, yeah, it was pre-pandemic. They actually $22. See, in February timeline, pre-pandemic, it was around 20 some dollars. Of course, again, in March, every single stock you look at in historical perspective, it's all get hammered, he fell bad, and then you come back up and rebounded. And it has been trading around the range of $14 to $17. So it was probably very, very nicely to hit $20 easy. And again, just have to be a little bit patient on this one perhaps. That's why I put it at a number 5 stock that you may want to buy. And I will say I will be patient and wait. The stock tip down a little bit at $16, $15 to $16 range will be good to buy. And then you can again sell it around $18, $19. I think this stock was 2 weeks ago, it was actually hitting $19 and come back down, right? Again, from a macro perspective, we know there was a sell-off, in a week, 2 weeks ago, and then this week was actually happening very, very nicely rebounding. All the stock were hit up close to 52 weeks high, right? So sometimes it's hard to really try and rationalize, explain why there's such a big fluctuation, volatility within the particular stock as well, because of macroeconomic factors. So these are the 5 stocks. The other one I recommended, I'll go very quickly. I'm going to give you a lot of detail, but at least you can see the screen. Maybe these are one of the stocks that actually in your list that you are planning to buy, and now with my recommendation, it gives you more confident assurance that you want to go. gas GES actually have been gone up quite a bit already. So it was as low as probably a month and a half ago at $9. So if you think about $9 and currently was at $13, you really gone up quite a bit. $4 is very significant, right? And then it was about a range of 11 lush for a while. So even $2 is pretty nice go up there. So I would say, hey, buy it around $11, $13 is a little high. Because of the holiday season, the chances of actually the stock is moving up to that level was pretty promising. So, but then you may probably want to sell after that. And but the gas 52-week highs have been around a $20 level, if I remember correctly. So because of the retail industry, we're getting really hammered really bad. This stock actually in the March 17th, if it went back to the graph, it probably was only around $5, if I recall correctly. So then you can actually have been rebounded pretty nicely. They do have revenue sales, so I'm pretty optimistic about this one. That I think you can make 10% pretty easy if it would have got it, or the market next week or following week come down a little bit, then you can get $11. You can get the money back. Sales, the other one, next one, Salesforce CRM. I think I did recommended this one maybe 2 weeks ago when the market starts slipping from the sell off. So it was actually as low as around 230 some dollars. This stock actually it was substituting for Dow Index account for the Apple split. So I think this one, well, 270 was as high as it was hit, which was pretty big, pretty expensive at the point. If you look at the index that when they were at 270, it was really 52-week highs on Nasdaq. So I think you should have come back down and probably buying a 230-ish range would not go too wrong with this stock. And when you rebound or if the market bullish, you'll be very well easily to hit $300 on this one. And I have been actually worked for a company that use Salesforce before, so I knew this company always have been continuously growing with different kind of applications, different way of do. You become a sales dispute tool as well, and you're also doing some very nice graph and charting to look at the territory wise how the business can grow. What sector or sales that they have on what product. So you actually did a BI reporting very well as well with internal with this tool. The next one, UPS, I think it did gone down to when the last week there was a sell off. It was hitting about $156, I believe. So I was planning to buy it, I didn't get it because it was actually at the lowest end and then rebound. So I think the price would be really good to go 150, 155. Target price wise will be $200. I think once you hit over $200, this stock may be running a risk of overvaluation. And then the next one is Workday, which this one is I have been tracking this stock. I actually want to buy it around 100-ish, but it keep going up every day. I mean, if you go back to the graph, you will see it. Workday have been keep going up, surging every day. And then until the sell off, then it actually dropped from $240-ish, dropped down to $205. How significant that was for 20% discount. So I bought this one at 205. I sold it at 225. And right now 226 was slightly higher than what I sold at. I may buy back if it dropped back to $205 again. I think this stock, honestly, with all the company, the thousands of companies in the United States, actually a lot of companies switched to use Workday. It was for two major purposes: payroll and also HR management. So this is really a huge area and a big application. Everything. I mean, a lot of company adapted to. So $300 is a pretty realistic number, from that perspective. And the next one is MITEK, which is a technology stock called facial recognition. And I think this stock, I've been tracking it as well, and I've been keeping the range of basically it was starting from 12 something, $12 something. When I tracked it, it gone up to like $17. That's crazy. So I think you probably want to buy it around no more than $13, and then you can sell it when you hit $15 because my target is only $20. Well, this doesn't seem to be as robust as the other top number 5 stock that I recommended. Okay, and I will give you 5 more stock just for the heck of it. I'm not going to go into any more detail of it because otherwise this video will be too long, and in most cases people didn't want to listen to a long video. Nike was one of them that I think with the Christmas coming and the increased sales in China with their online business, and also they're trying to automate and do a lot of motivation sales discount to get younger people to go continue buying the stock. I think this stock, if you read, I actually think this stock will be if you hit $100, it's a big discount, strong buy company, but I doubt you will ever hit $100. So that's why I just down to $107 to $115. The range kind of big to buy it, and I think it will hit $150 next year or so. The next one is Gap. Again, from the retail store, there's a lot got hammered. So this is the one I see have been recovered the quickest. So I think the stock actually have been gone very close to the 52 weeks high. And I believe they have a new design that enlists in stock and have a contract signed. So that is where you bring into the new revenue that wasn't accounted for in the historical figures. So I targeted this stock will be hitting maybe $30 or so. Apple is another one. I think if it's gone back down to $105, it definitely is a big buy. Despite that, iPhone 12 may not be as good, as strong sales as what they said. And the company actually, again, they said they have kind of shifted their revenue to be some cloud computing business and games. So, I mean, you never know that, obviously. I mean, selling the iPhone is still a very nice business. Accessories, they make heck a lot of money on accessories. They make money on iPad. iPad was very nice. A lot of people have even more than one, but two iPad at home. But iPhone sales, the super cycle, I don't know if this is really a case of standard with the China iPhone 12 sales is weaker than expected. But ultimately, this is really a strong company. And, if you buy the stock before the split, you actually should make quite a bit of money. But again, if you will have a whole Apple a few years ago up to this point, your return is really humongous, more than 300% return, right? 2 times more than what you bought at. So I am facing the stop in this level, and target wasn't very aggressive. This is $150 is coming from a couple analyst rating company. So you could have gone to $200, but remember, without a split, the 200 will mean $800 in this stock, which is actually at one point was only $200 in previous years if you look at it, or even smaller than $100. So you talk about 7 times growth, but you have to put Amazon, other high tech in comparison, and Zoom and so on, and ask yourself the rationalization if this make any sense, right? So, but for the long term, which could be longer than 2 years, that you're gonna hold and buy the Apple at $105, I think it will be really growing for much better in the future, and it will give you really good values, a sustainable return on that one. And the NOW now, and again, this one I personally think is overvalued. I love the technology. I think this stock is awesome. I have worked for Coke, and Coke have been using ServiceNow where I learned this technology, how this company can be done with integrated end-to-end solution. The stock when I bought the stock, which is crazy enough, around June timeline, I was only bought it at $200, and it got up to $300. I was so happy, right? Well, now it's at $500. So I personally really think this stock would not buy at $500, not recommended. The reason I'm saying this is you evaluating the up risk versus the down risk, right? At this moment, if you bought at $500, I think the downside is higher, chances are higher than the upswing. So I will actually bought it around $380 to $400 because I remember this stock back to September when I am actually very conservative. So when I buy stock, I put the purchase limit. I normally do 15% to 20% discount of the price I seen in the current market. So I actually got this stock at $420. I was so happy when it was $500 back in September the 3rd. So I got it around 4th or 5th. I don't recall, but you get the story. And unfortunately, it was dropping further the next day, and then people were really panicking. At that time, September was in panic mode whether it's going to be crashing rather than a correction. The stock actually went down to $380 next day. So when we bought the $410 and 420 when the market was still kind of not bearish, the term they use is bearish, I actually sell this stock. So I was kind of flat on this stock and making money, but then of course if I would have wait for a month, it's crazy thing happened in August, and on October. So this stock went back to $500 level again, right? But again, because I'm more realistic and tell you the truth, so I'm more short-term vision to share with you. So then I wouldn't really recommend to buy stock like that at this level. That's why I have 380 to 400. And then the next one is FUV, which is a small little motor automobile. And actually the price has been growing. So it actually $6 now, and if you have looked at it 2 weeks ago, five-ish. So I actually time back the price back to 2 weeks ago, $5 to $5.50 is good to buy. You can sell around $7, probably pretty easy to reach on that level. And my target is $9 on that one. I'm not going to any more. I have more, but I think these will be served for next time when if my friends actually interested, or just share with these people offline. But I do want to, before I wrap up here, I do want to share my track record so that for those of you who don't know me, knowing that what I have done, and these are real trades that done by myself, and you will making money. And I have been propaganda to my friends with my daily video update, talk about the recap, the P market, and what I think going to happen. So a lot of time I recommend some of the stock, and lately I was talking about a lot of China stock, focusing on the Chinese recovery. So the number one was BIGC, and actually give you the price date, October 30. The price was $78, and right now it's $83. So if you would have bought it, at that time, and then $83, you do around 7% return. Actually, for the week of September 19, so this is just October. If you would have bought even earlier than that, you actually was around $75 less. So you buy around that range, you hang on to it. You at one point it was hitting $90 too. So you actually have a nicer return than 7%. And because this stock I've been get at different time depending on when you buy it 2 months ago, or just listen to my recent video which is 2 weeks ago and tracking with it. I bought it with team during that time. Your return will be around 7 to 10%. The next one was JD. JD was really big. This one I hit a home run basically. I bought it around 85, and it was dropping at one point. It was 70 some dollars. We were even cheaper, so I bought that on that layer. But because of people who listen to my video, maybe in the week of November, so I want to illustrate a higher purchasing cost, which is $85, and then the price as of Friday was 92. So you will actually gain 8%. This stock I'm sure looking, and I'm waiting to hit $98, and I think that's good to go. I'm not worried about what happened after that. I cannot project then this stock will go more than $100. And remember, November 11 is coming, so that's the great online sales day for China. So I definitely will sell the stock probably a day after that. The third one was even more amazing, PDD. This one I have been propaganda for months as well. So in October, I bought it. It will be at $86. Actually, if you would have got it in September price, or then you will get it at even cheaper, like 70 lush. If you look at the graph, if you don't trust me, and then if you buy it in the week of November 3rd, before it have to be before November the 4th, okay, where the price starts spiking, you get around $90 to $99. Just to give you the idea, at the time I told you to buy. Then now you hit $113, way higher than the 1 year high, 52-week high, which is at $98. You actually make a very nice return. If I remember correctly, Yahoo Finance Live say if you buy Pinduoduo on the opening of this week, Monday, the gain is 27% on PDD. You can go back and do the math. I won't lie to you, but that's the right number. So my return was 32% on that one. Then the fourth one is PME. It's also a China stock. It's a fishing stock. I actually analyzing over a list of stock that I get. I think this stock was a good one to buy. So I recommend it in October. It's $1.75. You may get it a little high, maybe $1.90. and then you gone up around actually at one point it was gone up to 240. I sold it all already at 240, and today price is slipped a little bit to 218. So use that price. The return is still give you 25% return, which is another very nice one. Then obviously the really big winner on this one, XPEV, which was on my list, the second item to buy on my recommended list as well. Still recommended, even the price have gone up. I bought it around IPO time, $20, and as of Friday it was $36. So that gave me 82% return. So this one was very amazing. I think this stock will continue to grow up. And if you buy it and wait a little bit, maybe at 30, my recommended price 30 to 35, you wait, and then next year by March, if you really make $70, hit that point or even earlier than that, well, you probably want to take me out for dinner, right? Or share part of your shares, 10%, and give it to me. Because again, I'm doing it by percentage because I'm a real trader buying stock on my own, and I don't have a lot of money. So I can only do percent. If Bill Gates would have give his money to me for me to invest in this type of return, he will have probably more than even Warren Buffett, the Berkshire A and Berkshire B return. And he wasn't doing that well. If you're tracking the Berkshire last couple of weeks, I mean, you still gain. And also Goldman Sachs, you look at it, they actually wasn't doing very well because of the financial sector get hammered. Anyway, if you like my video, watching what I said, please make sure you subscribe if you're not done so. Thank you for your support. Have a wonderful, nice day.